Welcome back, everyone, to the Boiling Points, episode 16, the stock market introduction. I am here joined by my senior financial correspondent, John Commons. John, welcome to the show. I'm glad to finally have you on. People have been waiting to do this topic on the podcast pretty much since the second episode, really, is when I started getting asked about it.
Well, very, very happy to be here. I'm glad to finally be here. It has definitely been a long time coming.
Yeah, I know
I
you're busy all the
definitely,
time.
yeah, right. Well, I mean, I hope I can live up to the hype and to the expectations, but
I'm
yeah,
abs- I'm absolutely sure that you will, and if people don't like it, then they can go somewhere else.
yeah,
So,
right.
all right. Well, we're going to talk about the stock market today. I wanted to do a show on the stock market, and for anybody out there who's thinking that maybe they want to take control of their own finances, their own money, even average people, you don't need a lot of money to get started in the stock market. You can do it with a little bit. You can take a little bit of money out of every paycheck, and I want to try and encourage more people to do that. And being that you were the one who was initially talked me, not that you talked me into it, but that you gave me the motivation to actually get started because it's something I've been wanting to do for a while. And I've been, for everybody who knows, I've been doing it now, about 15 months.
Wow.
Comments, how
I
long have you
remember,
been doing it?
I remember when you first started. I mean, not to interrupt, but yeah, I
Yeah,
remember. Can't believe it's already been 15 months.
I
Wow.
know, right? Crazy, just crazy stuff. So you've been doing it how long then?
Um, well, I mean, I think I, along with everyone else, have had, 401ks and different investment vehicles well before I actually started, taking more direct control of it myself. But I've been kind of really heavily involved with it since about, I think, July of 2018. I think
Okay.
is when I really started getting um, when I started actually investing. I started reading about it and started, getting more information regarding, what it was other than just a graph that goes up and down. Earlier in 2018, like late 2017, but didn't really start investing until I'd
Okay.
say, yeah, July, maybe early August
So
of
you
20.
did so you did 6 months or maybe a little more of research before you actually decided to start investing your own money.
Yes, and that is one thing, not to just kind of jump right into it, but that is one
No,
thing that I would recommend everybody do. I mean, regardless of what I say, what pundits on different news stations or TV channels or articles you read online, no matter what anyone else says, the best thing you can do for yourself is just read. And it's not necessarily that you need to sit and just pound every book you can find on it before you start investing, but it's good to have a general understanding of what you're doing before you play with your money. It's your money. You want to make it work for you. It's not that you need to dedicate, you know, every hour of every day to understanding it in order to be able to start doing it. But in order to make your money passively work for you, you should at least have a little bit of an understanding of what you're doing with it and there's a lot of people that, you see these YouTube videos of these guys with these three beautiful women behind them. They're walking off their beachfront
yeah,
property. I just made $9,000. Now it's time for me to hit the sand, something like that. You
yeah,
see all that. That's the glorious stuff. That's the sexy stuff, but that's not reality.
yeah.
And 9 out of 10 people aren't going to make it like that. There's those get rich quick schemes. If you really want to make money investing, it's not going to be quick,
No,
and it's
it's
not going
not.
to be easy. And there's going to be
No,
a
it's
lot of
not.
frustration. There's going to be a lot of missteps, miscues, but those aren't necessarily setbacks as long as you learn from them. I mean, and that can be applied to anything in your life. If
Of
as long
course.
as you learn from the mistakes you make and turn it into a positive learning experience, then sometimes those things can help you in the long run.
Yeah.
It's a
So
cliche.
you spend like 6 months or so before you actually started investing, which I think is very important. It's good for people to know what they're doing before they get in. And I want to tell everybody before we get too in depth here that neither myself nor Comets here are financial experts of any kind.
Nope.
You should not do a trade just because we suggested something or because we did something.
Mm-hmm.
You got to make your own decisions and do your own research and your own homework. So just we are not, we're not giving you advice on stocks to pick or how to do things in the market. We're just talking about the market in general. And though we may talk about things that we have done individually, that is certainly not for just anybody to go out and do.
Absolutely right. And
So
that's,
not a,
yeah, I'm thank you for saying that, because if you didn't, I was going to, that's for sure.
yes, absolutely. It's important. It's important to know that. And even with people on TV and stuff, you're watching somebody TV or you follow a
Especially,
blog.
not to interrupt you, but especially with people on TV, your Kramers and even your Dave Ramseys of the world. Wow,
Yes.
they sound, they're silver tongued. They sound great. They sound like they know what they're talking about, and they do know
Yes.
what they're talking about to line their pockets. They don't care about you. They don't care about the kind of money you make. They care about pushing a stock that either they own, a company they own has a large share of, or that they're getting paid to push. I mean, if you
Yeah.
think these companies, especially when you, and we'll get into this later, but if you look at some companies, when you go to buy stocks, they might have ratings like buy, sell, and hold. Every single investment firm, Zacks, Barron's, all those kind of places, they are paid to support those stocks. Like, they are paid to give a positive buy rating. I mean, companies want people to buy their stocks. I mean, that's why the NASDAQ, which is, we'll get into that too, which is one of the stock exchanges, but for technology stocks,
Yeah.
all the information on their website, as well as the New York Stock Exchange, the NYSE, you can go on their website. There's a wealth of free information, which is good information. It's not bad information. It's the stock exchanges themselves. They have free information on their websites because they want people to invest. They want the American people to put their money into the economy. I mean,
Yeah.
this is kind of getting a little, and I'm going to bounce around topics just because.
Yeah, it's all right. So, yeah, before you continue on there and bounce us to another completely different topic there. Let's back up there and go back to about how people need to they need to make their own investments and that they can't take, our advice to, just because we're doing it doesn't mean you should do it. Um, and you should like you were saying, you should do that with everybody on, even the people on TV, the blogs you follow. It's about you. It's about your money, and you can't be just listening to other people. You got to do your own homework. You got to know at least a little bit about what you're doing. You don't have to be a professional, but you do need to learn something, and you need to know how to do it if you're going to do it. And while we certainly I'm not going to suggest, we probably won't even suggest certain people that you should listen to or certain people that you maybe shouldn't listen to. I do feel very confident in saying that you should never listen to Jim Cramer, ever. He absolutely is the worst, and I don't think that anybody should listen to Jim Cramer. So
No, Jim
that's where
Cramer's
I
wrong.
stand
If
on
you
that.
look at historically at Jim Cramer and his picks, he's wrong like over half the time. If you look at Bear Stearns, which was a large investment bank that was huge, one of the biggest in the U.S. prior to the subprime mortgage crisis, we all know, when the market really took a tanked in, was it 2008, 2009? The economy went into that historic recession. Bear Stearns was one of the companies that was really bought into these subprime mortgages, and Jim Cramer was, oh, it's Bear Stearns, they're too big to fail. Buy Bear Stearns. Bear Stearns is going to be fine. And I
Yep.
think not even a month later, Bear Stearns goes bankrupt. All their shares are bought by JP Morgan for under $10 a share, and shareholders who are invested in them were screwed. We're
Yeah.
screwed. And there's no reason I mean,
No, I mean,
it's
I feel confident in saying that I don't think anybody should listen to anything Jim Cramer has to say. I don't like him, and I've actually looked into some of the things that he says, and I think 50% is very generous of you. Uh,
well, I know. I mean, you can look it up. He is wrong over half the time.
yeah, and
He's
yeah, and
like
just
the
the way he
divorce
comes
rate,
off.
dude.
Yeah, the way he comes off, he doesn't give you information. He comes off with his little sound bites and his soundboard that he has, so he can just slap things and make all these different sounds. It's all fluff. He's not giving you any information. That's why I don't like him. That's why I watch other people on CNBC and online follow some other people. But Jim Cramer, no, I feel confident in saying no one should listen to Jim Cramer or anything he has to say.
Yeah, and
So
that's a safe thing to say, and
yeah.
I would agree with you on that.
So
And
if you're a new person, I'm a new person. I want to invest my money. What do you have a suggestion on maybe what platform they should use for someone who may be new?
So
Or do you
there's
not
a
feel
lot.
comfortable talking about that?
Okay, so I think most of us and most of the people watching this have heard of Robinhood. You
Yes.
know, it's a very revolutionary app slash website, I guess you could say, that was really the first commission-free trading platform. Now, commissions are obviously what the stockbroker can make on you. If anyone's seen Wolf of Wall Street, that's how those guys made their money,
Yeah.
through buku commissions. Well, Robinhood essentially takes that part out so that you don't have any investment tools at your disposal, really. You don't have any market data, things like that, but you have a nice, pretty bare bones format with no commissions. And it was the first company really to introduce commission free trading, and it got a lot of people who normally wouldn't get involved in it
It took off.
involved. And
Oh man.
that in and of itself is very indicative of its value, in my opinion. I think besides the fact that it's commission free and you can make your own money, it's the fact that it's getting people interested. It's formatted so that in this busy day and age where everyone's too busy for this, too busy. I mean, it took me 16 weeks to get on this podcast. Everyone's so
Yeah.
busy living
Yeah.
life that having something like that is very appealing. On that same note,
Yeah, go ahead.
it can be easy to make bad trades because of how streamlined and how easy it is to
Yeah.
put in trades on
Mhm.
Robinhood, especially with options, and we'll get into that later.
Yeah.
But
So yeah, Robinhood is that's also what I use. CNBC refers to I think it was 50 million user accounts last time. That was the last number that I had heard on Robinhood. CNBC likes to refer to them as the Robinhooders now, the people who are taking control of their own money. But that's a lot of people. Hopefully we'll reach some of them, because I think there's a lot of people who are setting themselves up to lose money, because you don't want to just take your money and invest in the market. I think an important point that we should make is that you should never put anything into the market that you're not willing to lose.
yes,
Okay. Like, do
absolutely.
not put next month's rent into the market hoping to flip it and double your money. That's not going to happen.
Yeah.
So don't do it.
I mean, there's a very minute chance that it could. I mean, yeah, you could
Yeah,
put next month's
of
rent in,
course.
and you could quadruple it. Of course, the possibility
Absolutely.
is there, but that is such a, like I said, a minute chance that will happen. And I think
Yeah.
there's no get rich quick scheme with it. There's a
No.
retire comfortably at a good age aspect to it. And yeah, are those penny stock gurus, which again we'll get into those too, but like those penny stock gurus are the guys that trade options all the time, or those videos that we had talked about earlier where the guys are like, yeah, I'm gonna step out on my beachfront house because I just made
Yeah.
$9,000 in 2 minutes. Like, is that possible? Sure, but that guy that's making $9,000 in 2 minutes isn't telling you that he's got 10 million invested to make that 9,000.
Yeah.
So to him, that 9,000 is nothing. That 9,000 is peanuts for the average Joe like you and me. $9,000 is
Yeah.
that's a big
Yes.
chunk of change.
Yes, it is important to know that in the stock market, the more money you have, the more money you're likely to make if you're investing it in the right way. But of course, you can lose it. Stocks do go down. Some things do, really crater out. They really get down there. You could lose a bulk of your money before in a few minutes. In a few seconds, a few minutes pass, and you've lost it. So it goes back to that point that which is we're probably going to be making through the whole episode, that you need to know what you're doing. You need to know what to look for. So if you're a new trader, you're using Robinhood. It's commission free. It is very good, but it doesn't offer you a lot of tools. So you're going to need to look elsewhere for your tools. So what,
Well,
you suggested Robinhood. I'm the new investor. You suggested Robinhood. I've downloaded. I put in, some money.
It's not
What
so
do
much that I suggest Robinhood. It's that what I was saying is that
It's
it's
commission
the most
free.
popular, it's the most well known, but now with the advent of commission free trading,
Yeah.
there a lot of these companies, Schwab, TD Ameritrade, E-Trade, have all also gone to commission-free
Oh,
trading. And now
have
they
they done that?
also, I think Schwab and a couple of them charge like maybe 20 cents per options contract, but essentially,
Really? I didn't know that they had all went completely free yet. I
they
thought that
did.
they were all, oh, okay.
And it was actually a big day in the market because all those stocks, Schwab, E-Trade, all plummeted once they said that they were going commission free, because obviously a large chunk of their revenue are those commissions.
Yeah.
Now you
Wow.
may think, like, how are they making money now? The same way a bank makes money when you invest into a savings account. They take your money, or like a CD, a certificate of deposit, that you can get at a bank or a credit union. It's you essentially invest a certain amount of money away. You can't touch it for a set amount of time. The longer the amount of time, the more return you get on it. But they invest that money. That's what they do. They invest that money in safe, secure, not safe, secure securities, actually, like bonds, commodities, and some stocks, in more stable sectors,
Yeah.
like consumer staples, like, Coca-Cola, Colgate, that kind of stuff. But that's how they make money, is they take your money that's uninvested and they invest it, and they get a small return on it, and that's how they make their money without, gouging you for commissions now. But
Yes.
what I say all that to say this: while Robinhood's the most visible, and while it's certainly not a bad platform, I still have a lot of money on Robinhood.
It's also very user friendly. Robinhood is.
And that's, I think, and going back to what I was saying earlier, I think it being that user friendly can lead to a lot of costly mistakes. I know it certainly did for me.
Absolutely.
It's so easy. I mean, you can just sit there. I can be at work. I can have a lull in my day and just be like, all right, what's going on? It's noon. Oh, I see this. Oh, I see the price movement in this. Oh, it looks like this pattern is forming. I'm gonna buy,
Yep.
And that's not, you don't want to, that's trading. I mean, and we'll discuss the differences between trading and investing.
Yeah.
I'm always going to suggest investing over trading. And I
Yes,
think,
you are an investor, and while I have recently gotten more into investing, I still am very much a trader.
mhm.
Though I'm more of a long-term swing trader than I am
Yeah.
more of day-to-day or hour-to-hour kind of swing trader.
And you can
But
be both. I mean,
yeah,
there's no problem with being both. It's just that trading is more fickle,
yep.
and it requires more of your attention than investing.
You're absolutely right. Yes, I do
Uh,
spend a large portion of my day in researching, looking at things on CNBC, tracking stocks in order to make sure that when the stock goes down after it's gone up, I've secured my profits. It does require more work. Yes, it is. It is much more work. Investing, you put your money in there, and then essentially you can, you don't have to check it every day. Your plan is to hold this company for the long term in the hopes that the stock market can, that the stock price continues to go up, and then in your retirement or whenever you decide to sell it for the profit.
mhm.
Um, so
And
yes, that's, I
you
mean, I
get
do a
taxed
little,
less on that too. I think that's a
yeah,
really big point here, is that you're looking at, and
right.
it varies state to state, but you're looking at your taxes getting reduced by over 20% if you hold it for at least a year. So if I buy 30 shares of stock A and it goes from $15 to $30 in a 1 month period, I'm like, that's a good profit. I want to sell it. Sure, you think, like, if I just bought one share, I make $15, but you're going to get taxed at least 33%, at least a third of that's going away. Whereas when you hold it for at least a year and then sell it, your tax rate could be as low as 10%, sometimes less, sometimes
That's
more, but generally between 10 to 15%. So you can obviously see why it would be conducive to you to, theoretically, you'd make more money if you make sound investing decisions. You make
yes,
more money when you hold them for longer, because it's just like when you win the
yeah,
lottery. You don't win 250 million when the jackpot's 250 million. You get all those taxes taken out. It's the
yeah,
same kind of concept. It's just kind of entices people to hold stocks longer. The
yeah,
Nasdaq and, like I said, the New York Stock Exchange, they encourage people to hold stocks. That's why you get a favorable tax rate when you hold them, because they don't want people to trade. They
yep,
want people to invest. If you invest in stocks, you're investing in the U.S. economy. That's why when a lot of people bitch and moan about capitalism and how it's this, that, and the third, and you can't come from the bottom up, it's like, it's easier now more than ever with all these commission-free trading platforms and
mm-hmm.
investing platforms to invest your own money. There's no reason that you can't make capitalism work for you. I'm not going to sit and say that I'm going to be a millionaire, that we're all going to be millionaires,
No, but
but
you
our
don't
free
have to
market
be.
system is is the best in the world. And if there's
Yeah.
one thing you can say about the U.S., it's that you can really go from rags to riches in this country. I think easier than you can in a lot of other countries, and a good vehicle for doing that is investing. I mean, it's the best way, in my opinion. There's multiple ways to make money in this country, but I think
Yes.
one of the best ways is, instead of letting your money just sit in a bank account or sit in a
Absolutely.
401k or sit in low yield accounts, invest it, especially if you're young, you know.
That's what I think too. That's why them getting the commission free thing I think was huge for getting people to start investing their own money. I think that was huge. And here we go. Credit to John Comets for being the first smoker on the show. It took 16 episodes to get that in, if you can believe that stuff.
And can you believe it's on an episode about finance?
About finance too. There you
Well,
go.
it just goes to show you that anyone can do it, you know?
Exactly. And also the taboo about marijuana is sorely unfounded. But yeah, exactly. I think it is important that people know they need to invest their own money, that you can make it. Capitalism does work. And it works better in this most. I'm sorry, I was about to say most best. What terrible English that would have.
It works most betterest.
Yeah, I sound like Joe Biden now. It works most better. Listen here. The thing is, it works most betterest. Um, it works best in this country, it seems to, as opposed to the rest of the world. Our economy is one of the strongest in the world, and
well, you
now
can
with
invest too.
yeah.
The great thing about this economy and this country is that there are electronically traded funds, ETFs, which are like
Yeah, let's talk about the differences. Let's talk about some of the differences between like an index, an ETF, and then like a normal company like Coca-Cola, since you were saying them earlier, that you would invest your money in.
all right. So we'll just get in. We'll get into some of the basics here. So the New York Stock Exchange, if anyone doesn't know, I mean, everyone's heard the word, but it's basically just a platform for trading American securities. Securities being stocks, you know, and stocks obviously being a portion of a company that you then own. If you own a stock of a company, you own a share of that company, you are part owner of that company. If you ever hear shareholder meetings or companies that base things, like I'll get emails sometimes from Microsoft, you know, they're making decisions where I get to vote on which way it should go. They directly let you have a stake in the future of the company. Now it's all shareholders, you know,
Yeah.
33% management, 33% large investors, and then 33% shareholders. You know, you get a say in what that company does moving forward. So I think that's pretty cool to have ownership of companies, especially good companies. But the New York Stock Exchange is kind of just where those companies list their securities. And the NASDAQ, if you ever hear about the NASDAQ, that is pretty much just like the New York Stock Exchange. It is part of it. You know, NASDAQ stocks trade on the New York Stock Exchange, except NASDAQ refers to all of the technology stocks. So if you're looking at your Microsofts, Tesla, Apple, those kind of stocks are all NASDAQ, obviously, because they're technology.
And that's all, but it's all the way down to small companies too, right?
Yes,
like that's why even for someone who's newer might see like Apple stock go up, but the Nasdaq is down.
Mm-hmm. And there are a lot of things too, like Apple makes up a large chunk of the NASDAQ. So on just to kind of go with what you just said, the rest of the NASDAQ could be down, but Apple could be up, and that'll drive the entire NASDAQ up.
Yeah.
You know what I'm saying? Or two big stocks in the NASDAQ maybe having a great day. Maybe their earnings are coming up. Maybe they just unleashed something that, you know, is unexpected or whatever it might be. Like, for example, Tesla, which is now part of the S&P 500, and we'll get into what that is in just a second. A lot of I mean, I'll get into Tesla. I'll give Tesla its own little section later, but
yeah, definitely.
You know, they unveiled a lot at once. Elon Musk kind of did a lot at once, especially this year. I mean, and Elon Musk he's at the forefront of the news, which, you know, news doesn't really affect, you know, what kind of president we have, what kind of world events are happening. Honestly, in the long run, doesn't have an effect on your investments. Now with trading, yes, it you know, those kind of things do affect it. When Elon Musk, to go with, you know, me smoking for the first time on this podcast, when Elon Musk
smoked on the Joe Rogan
smoked weed on the Joe Rogan podcast, Tesla went down 7%. The second he did that.
Oh my goodness.
Now that's wild. It recovered. It recovered. But it's wild to believe that something like that can have a sharp effect on a company. You know, it has nothing to do with their financials, nothing to, which is what
Nope.
it normally should be. It has nothing to do with, their next quarter earnings report. Nothing like that. It just has to do with the fact that the guy was on a podcast smoking weed.
Well,
Trump tweets. I follow Trump on Twitter, not because I'm some sort of huge Trumpite, and I don't like Biden either. This isn't politics.
yeah.
But it's because he's the president and he tweets. He tweets a lot, and his tweets have an effect on stocks, not just sometimes the whole sector, sometimes just a couple stocks. When he shouts out Moderna, which is one of those companies that's working on a coronavirus vaccine,
Yeah.
they shoot up. I mean, Moderna was like $14 before this all happened. Novavax, which is a stock I bought, was at $5 pre-coronavirus. To its max, it was over $150. And right now it's pushing. Right now, I think Novavax is at. If it's not over 100, it's pushing it. I had sold mine because the financials for Novavax aren't there. Yeah, $97. The stock's $97 right now. It's insane. Neo, which is a stock you follow.
And it is a stock I follow.
Mean, have you noticed?
It's actually what I'm currently in. So yes, I have noticed how it's been jumping up, especially the last 4-6 weeks.
Yeah, about the past month. I mean, honestly, and here's the thing. To go back, like I said, I'm jumping all over the place, but there's nothing behind. They don't even own their own factories. Their cars had electric fires. They haven't had a single quarter of profit. Nothing. They are riding the wave of this green wave, especially.
Yep.
Again, going back with someone like Biden winning the presidency. Biden is Republican light, so he's not going to do anything to stocks. And besides that, Republican or Democrat, it doesn't matter. The stock market is its own thing. It's affected obviously by policy, but even during Obama or Clinton's or Bush's, it doesn't matter whose administration it is. The stock market is its own. It's numbers. It's numbers. It's all about numbers.
Well, government can introduce regulation which can hurt sectors of business.
Yes, sectors, and that's the thing. If you're talking sectors, absolutely.
Yeah.
Okay, but the market as a whole.
Yes, of course.
No matter how far it goes down, it always goes back up, and that is historically proven. If you look at the stock market from its inception to now, inception.
Yeah, you're right. I'm pretty sure. Hey, let's go with it.
Yeah, it's not. It'll have its spikes where it goes down. 1929, Black Monday crash in October of 1987, the 2008 subprime mortgage crisis. You'll see where it goes down. Coronavirus, the 2020 coronavirus.
Gosh,
that is. It's always going to have those corrections where it goes down, but that's just the natural ebb and flow of things. It needs to do that. It can't just completely keep going up. But every time it goes down, it comes back up higher. Even this last time, it did the same thing.
Yeah, we're already reaching the levels we were at. Some stocks, some sectors are already reaching levels that they were at before coronavirus.
Yeah.
Which is obviously very good for me because I was just getting into it and then the market crashed. What a great time to get into it. Which actually,
I know that's the best time. The best time to invest is during a market crash.
Yes, because you can pick it up cheaper and then it'll go. It'll rebound and go back up. Of course, not with every company. Like we said, it's important to do your homework and do some research and understand things. Let's get back to the different sectors. We were talking about the New York Stock Exchange, the NASDAQ, the S&P.
So that's where you can actually. That's where you buy your stocks themselves, is the New York Stock Exchange and NASDAQ. Now, there are different types of markets, too. There's over-the-counter stuff. I'm not going to get into that because when you get delisted as a company from the New York Stock Exchange or NASDAQ, you get, you can buy your stocks what's called over-the-counter, and that's its own market, but those are very risky penny stocks with really just basically crap companies. So
and
it's
probably not
worth
for an investor anyway.
Yeah, not for an investor. A trader might be interested in something like that because they're low cost stocks and they have high volume. So, and we'll get into what volume is. I mean, obviously, volume is a pretty self-explanatory thing. So go ahead. No,
I was going to say about the S&P 500. So those are like the exchanges. That's where the stocks are like listed. That's where like the exchange happens.
Yeah, so the
So then
index
what?
itself is the Nasdaq. The Nasdaq and the New York Stock Exchange are where the stocks are listed themselves. The
Okay,
S&P
so
500
yes, let's talk about like
is
the S&P. Man, I misspoke that all the way. Let's talk about the S&P 500. And SPY is something similar to that too, right?
okay. So I'll get into SPY in a second. So the
All
S&P
right.
500, the
Yep.
Standard and Poor 500, it is just the 500 largest companies in the U.S. by market capitalization. Market capitalization is just it's a company's worth. Whenever you see a company market cap of whatever it might be, that's just its net worth. Its net worth is calculated by the amount of shares outstanding, which is the amount of shares that can be sold to the public. There's shares that are already
Mm-hmm.
there's shares that are already scooped up by investors, and there's shares available to the public. Like there's a certain amount of shares are allotted to the board, the chairman, top executives. Then there's the larger companies, the larger investment firms that they get their share, and then the rest of those shares then go down to us. It's like there's class A, class B, class C shares. Okay,
Yeah.
so we're
Okay.
usually seeing class C shares. So the amount of shares outstanding times the price of the stock is its market capitalization. Okay. So
Okay.
these large companies, the 500 largest companies by market cap, are the S&P 500. This is the best way to measure the health and the strength of the U.S. economy. They are the 500 largest, and it rotates who's in there.
Yeah.
They are the 500 largest companies in the United States. If there's any one indicator to see how the economy is doing, that's it. That's if you're going to go with one thing, that's it. If you're going to follow one thing, that's it. A lot of people, and you always hear people talk about the Dow, 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 Dow. I I think it's funny. You can tell people that don't invest when they place a lot of importance on how the Dow is doing. The Dow is just 30 stocks, and it's not really indicative of anything because it's too small of a sample size. If
Yeah.
you really think about it, 30 companies aren't going to gauge. There are 30 large companies, but some of the companies in there, like 3M,
Yeah.
Boeing, for example, like Boeing's a large company. Boeing's in the S&P 500, but Boeing's, with all things going on right now, Boeing was having trouble before coronavirus
Yeah.
as a company with all the 747 Max failures and two crashes. Their engine failures. I mean, it was having problems anyway. Then add coronavirus on top of it. So it's like companies like that, they'll stay in the Dow. The Dow doesn't really rotate like the S&P 500 does, and it's just not. I don't even pay attention to it. It's not. It's really just 30 larger companies in the U.S. I think you've got like Nike, McDonald's, Microsoft. I mean, they're all companies you've heard of. Merck, which
Yeah.
is like a pharmaceutical company. So there's a lot of big companies you've heard of in there, but those same companies are in the S&P 500.
Yeah.
So there's no reason to follow just the Dow alone. There's really no rhyme or reason to it.
I'm not a fan of the Dow either. When I'm looking at it and tracking things, I'm not even really looking
They're,
at the
they're,
Dow.
the best thing you can take away from the Dow is using it to gauge market sentiment. Sentiment, obviously, think of what the word sentiment means itself. It's what people think is going to happen to the market or to stocks moving forward. You can measure sentiment by what people say, what people do online, or what they are saying on TV shows and what like that. And you can also measure it by the stock's performance itself. Tesla, for example, was riding, and not to keep mentioning it, but it's such a good it's such a good example for a lot of different things. Is it just when something good happened with SpaceX, which is a totally different company,
Yep.
it's
But
not linked to Tesla. It's just
nope.
Elon
It's
Musk.
Elon Musk is that. Yep. That's how it
That's
connects
it.
is through Elon Musk. And I did the same thing. I did the same thing that you probably did when they launched that SpaceX shuttle. I was actually watching it on CNBC. I was watching it, doing my stocks, looking at everything. And then I watched them showing this. And I said, what are the chances that Tesla is going to get some spillover from this SpaceX launch, that people are going to view this as somehow connected to SpaceX and the price is going to skyrocket? And
Mhm.
wow, did it.
It did. Yeah, it was like 15 to 20% a day, and it kept doing it. I mean, it's
Yeah,
unreal.
no,
It's
yeah.
unreal the kind of price movement Tesla's had in the past year. If you invested in
And then
Tesla,
they split.
yeah, they did. Apple did the same thing. And if you would have invested in Tesla at the bottom of the coronavirus, at the bottom, it was like at the end of March of this year. If you had invested
Yep.
God, if you had put your life savings into that, you'd be retired by
You'd be
now.
retired right now. Absolutely.
Which
Listen,
and
I did the same thing with Amazon. I actually got bought into some Amazon right after, like when the market started recovering, like after that big drop off and then everything leveled off a little bit. I actually picked up Amazon. I've made money off of it 3 times now because the difference between us. I'm a trader, you're an investor. So I've made money off of it 3 times now. But had I bought it originally at the price it was, because I don't have that kind of money, and Robinhood allows you to do fractional shares. But I bought it when it was at like $2,100 a share, and now it's at like what is it? What was it? 3,500 or something, or is it a little
no, it's
lower
like
than
32 now. It's
32
gotten
now?
close. It's gotten close to 35.
Yeah,
But yeah, I mean, no, it's definitely. Well, and that company's never done a split either. I think or they haven't done one recently. The last split they did was well before this insane run up that they have now. But I think
yeah,
everyone knows why Amazon's at the level they're at now. I mean, they're becoming a large conglomerate, really. I mean, they own so many different. They've got their toe dipped in so many different sectors that
yeah.
it's hard to bet against Amazon and Jeff Bezos. I mean,
It is. It is. And if
guy
there's
the guy
viewers out
is
there, if there's viewers out there who don't like Amazon or Jeff Bezos, then I encourage you and to encourage as many people as you can to stop using Amazon. Um, so
I mean, it won't hurt him in the long run. I mean,
it would have to
Amazon's
be, you'd have to, but that's what I'm saying. I mean, we live in a capitalist economy. If you don't like something or don't like a company, then don't shop there. Encourage other people not to shop there. That's how you're going to get, you know what I mean? You can complain and whine all you want. The fact is, the man had an idea and put that idea into practice and made money off the
and
idea,
any
and
one of us could
billions
do
of
the
people
same
want to
thing.
use it.
Any one of us could do the same thing. You
Exactly.
find a need and you exploit it.
Yeah.
I
Well,
hate to say the
exploit's a
word
bad
exploit,
word.
but I mean,
Yeah, that's funny. I was about to say, dude, exploit's a bad word, dude. Feel
but
it.
I mean,
Find it.
hell, if you've got good business sense and a good idea, or at
Yeah.
least if you've got a good idea and you've got a buddy with good business sense, there you go. But to go back to what I was saying,
Yeah, we were saying
there's
about the S&P 500.
well, the S&P 500, the Dow, which like I said, is
Yep,
is not really good for following what the market's doing, but it's good for investor sentiment because so many non-professionals and professionals that want to dupe the non-professionals use the Dow as an indicator of, oh, the Dow. How many times when you're listening to stocks, the Dow is down this, the Dow is up this, the Dow, Dow, Dow,
yep,
Dow, Dow. You hear about it all the time. So it burns into people's heads. Even people that don't know anything about stocks know what. They've heard the word Dow. They know
yep.
that
The
Dow
Dow
means
Jones. Yep.
stocks. They just kind of associate Dow with just like the market itself. And that is, I think it's a way of, media and, these pundits that, like we talked about earlier, get paid to push you in a direction. It's
Yep.
just a way for them to keep the public dumb.
Yeah.
And, man, I was guilty of it myself where it's just, Dow this, Dow that. No.
No, the
Like,
Dow really has no. I mean, like you said, like you were saying, but it really doesn't. It's not really an indicator of what the overall economy or what the
no,
overall
the
market is
S&P
doing.
500 is a much, much better.
Yeah.
Now there's also two more indexes, the two big ones here, and I've got notes here, so you'll have to
Now
from a
the
book I read
index
actually. I took
S&P 500 is an index, right?
yes.
So, and now that's different from what we were talking about with the Nasdaq and with Nasdaq
Those are
and the New York Stock
exchanges.
Exchange. Exactly. So, I just wanted to make sure that people were aware that it's separated there and that we're on the
Yes.
indexes now. We're talking about
Yes.
tracking indexes and what are
Yes.
they and
And an index is just basically, I mean, an index, it's just something that you use to measure different um, I don't want to say categories of stock, but kind of, like there's for example, the S&P 500, which measures the 500 largest companies in the U.S. Then there's the
yeah,
Dow, which is just 30 usually industrial stocks. It's
and
not really an
industrial. Yeah.
indicator of much. Then there's the Nasdaq 100, which, you could probably put two and two together. It's Nasdaq stocks, top 100 largest in that category. And then
Now
there's the Russell 2000,
yep,
which is more of a there you could argue that the Russell 2000 is kind of like a pure play on the U.S. economy because it's all the small micro cap companies.
yep. It is
Okay,
all the
it's
Russell
it's
2000
it's
is all small companies. Yep.
it's usually market caps less than like 3 to 5 billion. Okay, and those will all be in the Russell 2000. So you'll get fairly decent sized companies. 5 billion's not, not
Yeah, I mean,
tiny.
when we
But when
say
you
small
compare it to
company,
something like Apple that's worth 2.5 trillion,
yeah,
then
yeah.
it starts to look a little
Yeah, when we
small.
talk about small companies, we're not talking about like small in terms of like size. We're talking small in terms of market cap. Like
Market cap.
what is their
Yeah,
value?
anytime I talk small, big, whatever, and I will get into the difference between. Actually, I'll get into that right now since we're on the topic.
Yeah,
So
go ahead.
going into what we talked about market cap earlier, we're talking about the Russell 2000, S&P 500, all that different stuff. There's different categories for these companies based on their market cap. So there's the large cap, the super cap companies. We're talking your Microsofts that are worth like 2 trillion, Apple worth over 2.5, two and a half, close to $2.5 trillion. Amazon, if they're not over 2 trillion, they're pushing 2 trillion. What's another? Tesla's honestly getting up there. They're at like I think
Yeah,
500 billion right now, but there's a lot of companies that are just gigantic. These
yeah,
no fail companies. Bank of America is a big one. Citi is even a big one. JP Morgan. These huge companies that are essentially too big to fail. I mean, they really are. I mean, or it would take a total and complete economic collapse on a global scale for these companies to fail. So those are like your super caps. Then you have your
yeah,
large cap companies, which are usually anywhere from like the 500 billion, I mean, like 500 to 750. I mean, anything 750 plus is, those are your super caps. Those are gigantic companies, and there's only a handful of them in the world. Um, Saudi Aramco is another pretty big one. But the large cap companies, think your McDonald's, Nike, Boeing, Exxon Mobil, companies like that, proven, usually thorough in terms of their earnings reports. They are not too big to fail, but they're large companies. Okay, large companies that you can be pretty safe to say there may not be room for growth, and we'll talk about growth versus value, but your investment will be secure. Usually, these companies are the ones that pay large dividends as well. Then you've got your medium caps, which are anywhere from I think it's like 100 to the 100 to 500 billion, which they're your medium-sized companies. Think like PayPal is one. Visa's a large cap stock, but like PayPal is a pretty good example. Halliburton, General Electric at this point, Ford, Oracle, um, Intel, those kind of companies. Those are just examples where you know they're not, like I said, they're right there in terms of, because the bigger the company, the less risk associated, the less volatility.
yeah,
Volatility meaning the greatness in price movement. If you have a stock that trades flat just like this,
yeah,
that would be no volatility. If you have a stock that you can't really see because of this background, but if it's going up and down like a roller coaster, that's extremely volatile. I think the
yes,
one I showed you the one time as an example of volatility is PYX,
yeah,
Pyxis. I showed you. I think I still have that image saved. If I do, I'm going to put it on the screen. But it looks like a roller coaster.
yes, it does.
Volatility in and of itself, you can trade volatility, and I might not
Yeah,
even touch that on
we'll
this.
save that for another episode. We'll
Yeah,
save
I'll
that
say
for the more
that's
advanced
totally different.
episode.
But basically, there's micro caps, small caps, medium caps, large caps, and super caps. Okay, the larger the company, the more stable the investment is. The less likelihood it is that you're going to really lose a large amount on that. Now, of course, that doesn't mean that you're not going to lose money if you buy lots of shares of McDonald's, okay? But if you're
Yeah,
buying large shares of a company that puts a lot into research and development and that consistently beats the revenue quarter after quarter, pays a healthy dividend, you like their management, you like what they're doing with their company, and you think that there's potential there to make money, then those, there's a good chance, like we said, with your Microsofts, Apples, those kind of companies, that you will make money.
yeah,
Then when you get into your micro caps, your small caps, these unknown companies that no one's heard of, these penny stocks that are worth less than $5 a share, is there a chance that you might find the next Amazon? Hell
yeah,
yeah. Hell yeah, there is. Is there a higher chance that you're going to find some dud that's going to lose you money? Yes,
Yeah.
absolutely there is. And it's not, I would never recommend buying or trading penny stocks, but that's we'll get to that later. So basically each company is classified again by the size of its market cap. So the smaller the market cap, the riskier the stock. And, that's pretty straightforward stuff.
Yeah.
So, but you've got, like I said, yeah, you've got S&P 500, the Dow 30, the Nasdaq 100, and the Russell 2000 are your main indexes, and like I said, those kind of gauge the strength of the economy.
Yeah. And now what is the difference between if you wanted to buy an index or a stock? Why would you buy one and not the other?
Well, you can't buy indexes themselves, but what you can do is, so there's, I think everyone has heard of or maybe already invested in mutual funds, which are a scam, point blank period. They're a terrible, terrible investment. And if you're invested in mutual funds, I'd take your money out immediately. You're better off buying government bonds. I mean, and that's real talk.
Yeah.
But besides that, mutual funds are basically you're paying someone else to buy a basket of stocks for you with usually low volatility, usually low return. I mean, I'm mutual funds. I don't know the exact percentage, but I know that mutual funds usually don't even outperform the market. And by the market, I mean, like, one of the biggest indicators, the S&P 500. Usually the mutual funds don't beat the S&P 500. You're literally paying somebody. You're putting money into a fund, and the mutual fund owner or the person who runs the mutual fund, it's kind of like a 401k when there's a person that runs your 401k. He runs the 401k for everybody that's invested into it. Same thing happens with a mutual fund, but anytime that they have a loss or they make a bad decision, I mean, that affects you. You're letting someone else play with your money, and and you don't get a good return on it. So besides that, you're basically buying a basket of stocks. You're buying yourself exposure to the 11 different sectors of the U.S. economy, which I will go over. You're buying yourself exposure to that. There's something similar in the stock market called an ETF,
Okay.
which is exchange traded fund. Okay. What that is essentially like a basket of stocks in one stock. Okay. The exchange traded funds aren't really stocks, but they're traded like that. So going to what you were talking about earlier, SPY is an ETF that tracks the S&P 500. So what it is, it's this fund that you can buy like a stock that directly corresponds with the movement of the S&P 500. So when you buy a share of this stock, this ETF, you're essentially buying a share of the U.S. economy. And that's a very, very broad and general way to put it. I'm not by any means saying that that's exactly what it is, but that's essentially what it is. So anytime you buy a share of this exchange traded fund, SPY, you're gaining exposure to the entire S&P 500. So it's a good backbone for any portfolio. I own a few shares of SPY myself. I've certainly traded plenty of SPY options.
I have also. So what is the difference then between the tracking indexes and the ETFs? Why can you buy one and not the other?
Well, I mean, an index is just the companies. An index isn't really anything that you can buy. It's just something that tracks certain aspects of the U.S. Like I said, the S&P 500 is an index that tracks the top 500 companies. There's more than just the four I named. It's just those are the most common ones.
Yeah.
So these indexes are just easy ways for you to say, okay, let me look at the index that follows the energy sector because I want to see how energy's doing. Maybe I work in the energy sector and I want to see how my company or competitors or the sector as a whole is doing, or maybe I feel like I have inside info that would, give me a leg up on the competition, whatever it might be. You use indexes to just kind of track, in my opinion, the health of the economy or the health of whatever sector you're trying to track. So You don't really buy an index. You use it
The
as a
index.
point of.
So
You
the
kind of use
index
it like a point of reference.
the index is like a tracker. So you're saying like the index is like a tracker of the market or segments of the market,
Yeah.
and ETFs. How is that different from ETFs? Because you
Okay,
can
so
invest in
ETFs,
ETFs and buy
ETF,
ETFs.
ETFs are if you wanted to buy an index, basically.
Okay, so
ETFs
that's
are your way of buying an index. You're not actually
yep.
buying an index. You're
Okay,
buying an exchange traded fund that tracks an index and that buys a basket of those. So when you buy a share of SPY, it's an exchange traded fund. It's a fund that pools all the money together from all the people that have shares of SPY, and they buy fractional shares of all these large companies. And now you, as an owner of SPY, are now exposed to the S&P 500. So if the S&P 500 goes down, SPY will go down with it. I mean, if you look at SPY's movement and the S&P 500's movement, I mean, there's a fraction and a small fraction of a point difference between them. I mean, and SPY is the oldest and largest exchange traded fund, and it's a fantastic investment. You're investing in the U.S. economy. I would always, and I'll sit here right now and make that recommendation. You know me, I don't like
yeah,
making recommendations, but I would always say, do I say buy it right now, buy it right this second? I'm not going to go ahead and say that. But if you were planning on investing, yeah, you could buy SPY right now and you'd be fine, because no matter how far the stock market goes down, it always rebounds higher. That is not my opinion. That's truth. That's fact. You can read online, you can see a lot of doubters, but at the end of the day, the stock market always rebounds higher. So if you buy something now, you may not get a return until 5 years from now if you buy at like all-time high levels, but you eventually will get a higher return, period. And the same is true for good quality stocks. You know, you
yeah,
buy good ones, you may not see a return, you may not see a good return until 2 years from now, but there may be a catalyst in that 2 years that happens that just, like
yeah. That
Microsoft.
catapults.
I'm averaged in Microsoft at $97 a share. $97 a share.
Yeah, man, you're
And I
definitely
bought it
nice.
in I bought it in 2018. That was 2 years ago.
Yeah,
I bought it.
and
Now
now it's up.
I
What's
only
that?
have 75 shares, but
What's
those
that right
75
now?
shares are now worth $216 a share.
Do you remember what it's at?
Well, it's 216 and some change. I can tell you right now. Just gotta log in.
I don't have my quick list up at the moment. We're just both taking a look to see if we can see where Microsoft is right
It's
now.
216 and some change right now. I'm logging
Yeah,
in.
actually, you're right. 216.50.
Yeah. Yeah.
So
So
yeah, that's a good return.
so my total investment is, like I said, my total investment is just short of like 16,250. But when I initially bought it, and I went all in. I mean, I basically, Microsoft was the first thing I invested. I had, um, when I first started, I started with 4 grand. Okay. And I took all of that. I kept adding each payday.
Yeah,
Just keep adding. I still do. I still do that to this day. Any extra money I have goes straight into my investing. Um, but yeah, I mean, Microsoft was the first one I bought. It was the very first stock I bought. And I mean, when I first bought it, it was like $113. And then at the end of 2018, around Christmas time, you weren't investing back then, but
no, not yet.
we had a very big downfall, or I wouldn't say downfall, but a plunge for about a week there around Christmas time. I think the worst of it was actually Christmas Eve. And Microsoft, I was holding like 5 shares. And at that point, I had been, adding more money, adding more money, adding more money. I'd gotten to a couple thousand by the time, because I was really only holding a couple shares of Microsoft. It was the first shares I bought, so I didn't want to just keep throwing money into it.
Yeah,
But eventually, when Microsoft got down to it was like 90. I just went all in. That's when I bought all my shares, and I was like, and I felt, I'll tell you what, I I wouldn't recommend doing something like that now.
yeah,
I was
yeah.
I was going off hope and a prayer, um, but it worked out for me in the long run. And I
Doesn't
think I felt confident because Microsoft is again, one of the largest assets.
Yeah.
I mean, I'm using Windows on Skype right now to have this
Yeah.
podcast.
So am I.
Exactly. You know,
Yeah,
so
that's what. Yep, exactly. That's exactly right there. Yeah, Microsoft would certainly be a strong company to
yeah,
invest.
Microsoft, I mean, and that's another one I'll say. I mean, these big, giant ass companies that continue to come out with stuff that have monopolies on gaming, on video communication, on PCs. I mean, this kind of stuff that's not going anywhere. That's the
Yeah,
kind of stuff that it's they've proven value. I mean, they're good, solid, sound investments. But a lot of those companies now, tech is a noticeable example of something that kind of strays from this trend. But a lot of these companies, let's say your Nikes, your McDonald's, your Waste Management. I own a lot of Waste Management. American Water. I own a lot of American Water. These are companies that they're steadily going up, but you don't see them do those giant. They don't do those giant spikes.
yeah,
Instead, they have those are value stocks. Well, I might as well just explain it because we're in that now, where these companies have proven value. The revenue is solid every quarter. They're not losing money, but they're not really flying up either. Okay, those are value stocks. Those are safe stocks. Those are stocks with less volatility, less risk involved. Those are good quality stocks to form the backbone of a portfolio. A few examples of the ones that I own are American Water, Microsoft, Waste Management, AT&T, and Pfizer. I just
Mm,
bought Pfizer before all this, and Pfizer actually went up pretty well. Um, so those are companies that pay great dividends, but their stock price doesn't really go up too much. Pfizer,
yeah,
I know Pfizer's going to be, barring any huge. I mean, Pfizer actually just went up big because of their coronavirus vaccine testing results and how they're going to have one ready here soon. It looks like they're on
yeah,
the forefront, and they've certainly got the money to be able to do it.
yeah.
But barring events like that have a big effect on it, Pfizer's kind of one of those stocks that doesn't really do much. It just kind of stays where it's at. Their revenue's good, solid. They've got a lot of drugs on the market, Viagra, for example, being probably the most well known.
Yeah.
That are they're making their money. It's big pharma. You can't really go wrong there, and they don't spike up like your standard stocks do, right? But they all pay. All of those stocks I mentioned, you all pay dividends.
Yeah.
That's why I'll sit at work and I'm doing all my stuff, and then be like, oh, I've got $78 from my Waste Management dividend today. Okay, cool. I've got
Yeah.
it set up that because they'll pay in different months of the quarter.
Yeah.
I've got it set up where I'm getting dividend payments from all these stocks, and they're all paying in a different quarter.
That's nice. Yeah, I'm
Yeah.
also in the process. That's how I instead of doing the day trading, that's how I evolved I don't mind sharing this with everybody. That's how I evolved my portfolio a little bit from more of swing trading or day trading to picking up stocks that some stocks that I hold for long periods of time that I plan on holding for a while. Um, and then I also have stocks that I'll sell when they go up, and then if they start to go back down, I'll try and sell them and then pick them up at the bottom of their little drop, and then
Well, and you can't time the market. That's one
no,
thing
you
that I
can't
want to
always
say
do
now.
that. Certainly
You
not.
cannot. You
No,
can't
you
do it.
certainly, yeah, you certainly
No,
can't
there's
do that.
no, and I want to make that abundantly clear to whoever is watching that
No, you can't always do that. I mean, I've made
no,
money
you
off.
can never. There's not. You can't always. You cannot. You cannot. And I want to
Well,
make this very clear. You cannot time the market. You
oh
can't
yeah,
predict when something's going to go down. You can't predict when something's going to go up.
no,
You will get burnt. You may get lucky. You may get right 3 times in a row. I've gotten lucky a couple times,
I
but I've
I
gotten
did
burnt
too.
too.
Yep.
My biggest single day loss, and I shit you not, off me just doing that exact kind of shit was $8,000 on Tesla, betting against Tesla. And I bet against
Yeah.
Tesla thinking their financials don't support their stock price movement. They haven't even posted a quarter of revenue yet. This is before they did. They
Yeah.
just recently posted a quarter of revenue, but this is before then. I was like, their stock's flying up. It has no basis for doing it. They're trading at 700 times their earnings.
Yeah.
There's no reason for this stock to keep going up, and yet it did
Yeah.
because sentiment was in favor. So sentiment, there's so many different things that affect the price of a stock. Sometimes it's fundamentals, sometimes it's sentiment, sometimes it's a Trump tweet. Who knows? And
Yeah.
sometimes black swan events like the coronavirus that'll affect a lot of different stocks. You saw Zoom, which I know everyone knows what Zoom is now. Zoom,
Yep.
when it IPO'd, which IPO is an initial public offering. That's when a company decides to list itself on one of the aforementioned exchanges. That's an IPO. Why do an IPO? It's if a company has maybe an idea in the works, or they've kind of exhausted, they're kind of at a plateau in terms of their revenue and they want to raise more money for their company. A good way to do that is to offer up an IPO. A lot of companies, like I said, some recent ones here, Smile Direct Club. I'm sure everyone's seen commercials that you just kind of, or it's not
Yeah.
even that. It's like braces, except it's affordable.
Yeah.
There's a lot of kickback from dentists, and you could argue, are the dentists giving kickback because it's their money? They're getting these degrees, or is it the fact that dentists are actually saying, hey, this shit's unsafe. We go to medical school for this many years to do this kind of stuff. You can't just have some sort of Smile Direct Club certified person doing that kind of stuff. But that's
Yeah.
irrelevant. I was just using Smile Direct Club as an example of a recent IPO. So companies will use these IPOs, these initial public offerings, to raise money for their company. Zoom just released theirs last year, either
Yeah.
last year or 2018, but I'm almost positive it was last year. I traded Zoom, did not invest in Zoom. I traded Zoom just because when an IPO comes out, and it's risky, you got to understand. I mean, if you're willing to take those risks, you can make money. You can also lose it too. I'm
Yep.
always going to tout the effectiveness of investing. And if there's anything anyone takes away from this, that's what it should be, is that investing is always superior than trading.
Yeah.
It's just
And
not as sexy. It's not as glamorous. It's not as exciting. So it's not as easy to sell. You know what I mean? But
yeah,
it's
it's not for a card player such as myself.
it's vastly superior.
But
And
yes, but I am with you. It's investing is the way to go. That's what you
well,
should be
think
doing.
about this. The
Everything that
Warren
I do,
Buffett,
whenever I talk
Warren,
about what I'm doing, you should not follow what I'm doing. I take risks, and that's what I do. You should not
well, you
do.
take
I talk
risks
about,
when you invest too. I mean, it's not like you don't take risks when you invest,
but
and it's okay to do both.
but you
It's
just
okay to do both.
it's just funny
You
because
can.
you just said about this company that you can't always predict where the company goes up and go down. But with Amazon, I made money off of Amazon 3 times. I've sold it when it's right at the top, when it started going down, like not right before it went down, like not right at its peak, but when I saw it was going to be going down, sold it and got my money. And then when it was at the bottom, and I thought, all right, in the next day or two, it's coming back up, and I bought it, and then it did. I've done that 3 times now, as opposed to just holding it from the beginning and just riding those waves. I've
Mhm.
decided to try and profit off of them.
Mhm.
But I don't recommend that. That's what other people do. That's just that's my choice. That's what I'm choosing to do
Mhm.
with some companies and with some of my decisions. But I do have other companies that I'm holding for longer as well, and that's what I would also recommend for the new person who's getting in. You should be looking to invest for long term. Don't be
Mhm.
looking to make swing trades or day trades. Don't be looking to make that sexy $1,000 single day move. Don't expect that. That's not how it is. Invest for
Mhm.
the future. Don't be looking for the
Well,
shortcut.
and another thing too is when you invest, not only do you get the favorable tax rate, but I mean, there's risk involved in investing too. You can
Yeah.
buy a crap company that eventually just keeps going down, but the likelihood of, if you do your research, and the easiest way to be like, hey, is this company worth it? Is that any company? Oh, going back to real quick, let me finish up my point about the IPOs. They are very volatile when they first release,
Yeah.
so you can play that volatility. So you can, like you said, buy them, at the IPO, wait till it goes up a little bit, sell it right there, then watch it plummet back down. Zoom, so I played Zoom that way too, just because, I mean, and I'll get into the trading aspect of it on another episode, but
Yeah.
I wanted the first episode to be basics, and I wanted it to tout the effectiveness of investing, because that's
Yes.
how Warren Buffett made his money. And that is, I mean, that guy is full of quotables. If you want to read a book, The Intelligent Investor, okay, it's by Alexander Bell, I believe, or no, Grant. What's his name? It's Warren Buffett's mentor. I've read the book. It's got soliloquies that are kind of dated, and it's not Benjamin Graham, I think is what his name is. Let me just double check. Benjamin Graham, that's right. So that I was thinking Alexander Graham Bell. That's what it was.
Yeah, yep. I didn't go there because I was like,
but that's a great book for starters. That's a fantastic book for starters. But anyway, that guy was Warren Buffett's mentor. The biggest thing that Warren Buffett will tell you is to hold. He's got 1,000,001 quotables, but one of the best ones is don't buy something that you wouldn't hold. Like, don't buy something that you'd hold for 10 minutes that you wouldn't hold for 10 years. And that's the honest to God truth. Because if you're really trying to retire, and a lot of people are working, I work at my job 60 to 70-hour weeks. So I don't have the time for trading. And I know a lot of people work those kind of hours too. So a lot of people don't have the time to just sit there and trade. That's why investing is so beautiful.
Yep.
Every company that's publicly listed on the New York Stock Exchange, the NASDAQ, whatever, has to make their financials publicly available. Any company, you go on their website that is publicly traded, go on their website and there will be a tab for investors. You click on it, it'll have the stock price, it'll have any news, any relevant news to shareholders, and it'll have the company's financials. Look at the numbers. That's the easiest. Look at their assets versus their liabilities. How much are they putting into research and development? How much are they spending on payroll? How much are they losing? How much did they lose this quarter compared to last quarter? Are they losing this quarter because they're putting more into research and development? Or are they just losing money because now they're not getting as much revenue in anymore? Look at, and if it's easy to read it. If you've taken a basic statistics class or really ever used Excel, it's super easy, and it's not complicated stuff. You just really need to know how to add and subtract.
Yeah.
You just look at the list, you look at their financials, everything's laid out there for you. A lot of them let you print it out. That's how I made my investment in Square. Square's another company that I own shares of. Square's at like $192 right now. I bought it. I'm averaged in at 84. And nice. I bought in at 84. And after it went to 84, it went down to like 40 something. And trust me, my gut, I felt sick to my stomach. I only have 10 shares, so it's not anything crazy. But like my gut was like, oh my God. Like I'm losing like $400, but those 10 shares now are pushing $2,000, so it's not, and I why I bought Square is because I printed out their balance sheet from their website and I looked at it. I highlighted stuff, I added, I subtracted, I looked at it, and I determined, I was like, I believe that this company is going to continue, and especially with the advent of Cash App and then the Cash App debit card, and then the Square point of sale system becoming really popular with independent small business owners. I went for it. I was like, this is a company I want to be a part of. I feel like this is something that it's a good investment based on the numbers, and it took me maybe an hour and a half, 2 hours to go through their financials. And I really combed through them too. I dedicated like a small part of a Saturday afternoon to it. So yes, is it going to take a little bit of time? But you figure I made, I turned, less than $1,000 into almost $2,000. So I over doubled it. Now imagine if I had put more money into it, you know? So 2 hours of my time to double my money. Did that take over a year to do? Yes, it did. And yes, it went down to like $40 a share during that time frame.
Yeah.
So yeah, it made me shit a brick.
Yeah.
But in the long run, probably causing a couple more gray hairs, but in the long run, me researching the company and looking at their financials and determining that this was a company that, their asset to liability ratio mixed with everything that they were doing, mixed with the fact that I like Jack Dorsey. As a person, I don't know who the fuck he is as a person. This is what I'm saying with investing. That's why I don't care. Not like I said. I know I wasn't gonna make it about politics, but it is really not about politics. No matter who wins, Biden or Trump, it's not gonna make a difference unless. And like I said, now, if Bernie Sanders would have won, that's way different. You know what I mean? Because he wanted to change the structure of capitalism. You know what I mean?
Yeah, I think
that's different.
I think what you're trying to say is that no matter who is elected, Biden or Trump, and the reason that why it probably won't affect the market, or maybe won't affect the market on a permanent basis, is because like you said, the market responds to policy more so than it does about statements and stuff like that. It's more about the information and policy. So unless Joe Biden were to get in and institute the tax, like it actually passed the taxes that he wants to pass,
And
that would be something that might affect the market.
it will. Oh, it will. It will. It
But
will.
because
Those,
that he would have to, but because he would have to pass it, through law, through Congress and the Senate,
it's not going to
and
be anything
chance.
instantaneous.
And that's what
If you,
exactly. That's what I'm saying. The policies that would have to be instituted by the president would take time
yeah,
to do,
and
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 then would affect the market maybe later.
the
But
the market prices in that kind of stuff. So what I
yes,
mean by that is that unless it's a catastrophic, unexpected event, which we call black swan events, something like a policy change or something like that is something that is, it's not overnight. He's like, hey, taxing those rich guys 40%, here it comes, like
yeah,
overnight. It's not. That's something that we're going to know well in advance that's
beforehand,
happening. So the
yeah,
market is going to take its dive accordingly when it
mhm,
starts happening. That way, when it actually does happen, the market already priced that in. So it took its hit, it goes back up. It will always go back up. You know how many different economic changes and policies have happened over the last 100 years in this country?
yeah, absolutely,
FDR and his version of socialism, that it didn't make it certainly didn't help the market, when they started recovering a little bit after the Great Recession, and then his New Deal,
yeah,
had a negative effect on it initially, but eventually it started crawling back up there, man, and it will happen. That's what I'm saying. So they don't pay too much attention to that kind of stuff. Pay attention to the numbers. Little things like that are more important to traders because they pay attention to short-term price movements. If
yeah,
you're trying to invest, and this is what takes less time to get good at, it's the win-win, man. It's a win-win-win, really. You get taxed less. It takes less time to do, and you'll make more money in the long run. So it's like there's really, like I said, trading is good for, I mean, and don't get it twisted. I'd say probably 80% of my funds are invested, but I keep 20% on the side for trading. I mean, I trade, and we'll talk about trading in a different
yeah,
episode.
yes,
But
absolutely. We certainly do. We do a separate podcast on
yeah,
trading.
man,
Like I
'cause-
said, and like you wanted to. This for the very first episode, we wanted to make sure was about investing and about new people who would be getting involved, might be getting in the stock market, and what should they do? And that's what they should do: is they should invest. They shouldn't be
what we
trading.
should do, and
They
we'll
should invest.
not to think ahead to next time, but what we should do is take some, if you have people that, because we're kind of just shooting the shit right now.
Yeah.
But when if people do have questions
Uh,
about
I
certain
wanted
things, take those questions, ask me those questions. I'll give my honest opinion on it.
I wanted to have people ask you questions. I wanted to get some questions for you, but because we tried to do this like 2 or 3 times and we weren't able to connect. Not just because of your schedule though, because there was a time where you had time, but I was doing another podcast at the time.
Yeah.
So, we just couldn't hook up, and because it happened 3 times, I didn't want to put up like, "Hey, this time I'm going to have him on the show. Ask your
Yeah.
financial questions." But now that you've been on, and that's what I'll, if you're still watching the show, make sure that if you do have questions, um, for John comments, leave them in the comments. Ask your questions in the comments, whether it's on Facebook or on YouTube. I will track all the questions that are asked on either one,
Yeah, and
or on
because
any other platform. If you're listening to this on another platform, ask your questions. I'll write them down, and next time we have comments on the show, we can ask them those questions. We can ask them your questions. So
yeah, and it would help too, because I mean there's so many different facets to it, and there's so many different things you can talk about that it's like I know all this stuff, not like I know all this stuff, I am the guru, but it's like
yeah,
this is stuff that like I have so many different, it's like, do you want to talk about book recommendations? Do you want to talk about people you should listen to in terms of, never make investment decisions based on anyone but yourself, but good people to listen to, or good reading material, or different aspects of trading, investing, there's so many different things that go into it that
yeah,
it's like, I want to try and cover them all in one episode, and it's like
and
where to
yep,
start, where
no,
to go.
yep,
Yeah.
yep. That you have
But
to. Yep,
one thing I do want to cover, besides, like I said, best way, again, and I've repeated myself probably 3 times, but I'll say it again. The easiest and best way to make a decision, and this is the way Warren Buffett makes his decisions. Not that, we're all going to be the next Warren Buffett,
yeah,
but the way he looks at it is he looks at their financials. He looks at their financials. He doesn't look at their share price. He just looks at their financials, and he determines, is this company overvalued or undervalued? and he determines what their stock price would be based on just their financials. Now, that's not, like I said, that's not something I can even do. You know,
Yeah.
I don't look at a company's financials, do all the math, and be like, it should be this a share. You can do that. You
Yeah.
absolutely can do that, and that, you know, more power to you. That takes definitely more time, but if you can do that, there's nothing wrong. He did that with Petro China, I think it was, or China Petro, something like that, where he looked into their financials, looked at it, and said this would be this much, and then saw how much they were actually valued at, and was like, oh wow, they were under what he valued them at. So he bought, you know, his Warren Buffett sized shares of it, and it's Petro China. It's got to be Petro China. I'm gonna look it up.
I
But
definitely do not
they
know the answer.
flew up after he, yeah, it is Petro China. They flew up after he bought them. I mean, it made the guy billions and billions of dollars, and everyone looked at him like he's a genius, because he is a genius. He's made moves like that plenty of times. That's how he's built his Berkshire Hathaway empire.
Yeah.
Berkshire Hathaway being another good thing to invest in. But you know, he was patient. He took the time to look at the numbers. The numbers don't lie. You know, and it's not hard to do. You don't have to be that great at math. You don't have to, it's pretty basic stuff to understand. It's like I said, if you've taken a basic statistics class, even if you fell asleep through most of it, you'd still be able to read one of these balance sheets and make a determination based on those numbers. And another thing too, you can also buy on sentiment as well. Like when I bought Microsoft, do you think I looked at every one of Microsoft's financials? No, I didn't.
Yeah.
You know, not that I'm
I did
saying
when I
you
bought
should,
Tesla.
you know, but not saying to do that every time. But there are certain companies like, you know, it's a pretty safe bet. Like I said, I'm
Yeah.
averaged in Microsoft at $97. You know, it's a pretty safe bet that a company like Microsoft isn't going to go under overnight, or that it's a pretty good, they pay a healthy dividend. And dividends are just obviously, you know, when your savings account pays you a little percentage, or when you buy bonds and they pay a percentage, it's the same deal. Not all stocks pay dividends. Usually the value stocks pay dividends because, again, they want to entice people to buy the stock. If the stock isn't going up that much because it's just kind of a stable value stock, they're going to offer dividends, usually increasing every quarter, to entice people to buy shares of their stock. I own a lot of dividend paying stocks now. I didn't a year ago, because a year ago I was doing a lot more trading than investing.
Yeah.
Now that I work a job that, you know, I'm making pretty decent money at my job, and I'm working a lot to do it, I've scaled back on the trading and gone more towards investing, and it's,
Yeah.
I mean,
That's
my
what I'm.
God, it's been fantastic for me.
That's
You
how
know?
I'm expanding my portfolio right now. Also, is I've been again when I put money in, I'm investing new money into dividend stocks.
Mhm. And not every stock, just because it has a dividend, is worth it.
Oh yeah, absolutely.
Some shit stocks will pay you a dividend because they're enticing you to buy, but then they'll keep going down. They'll keep going down. People are like, well, hey, I just got a dividend. It's like, yeah, your dividend is not making up for the loss in the stock price itself. Like
Yeah.
you're
No.
getting like Washington Prime. That's a good example of, it's a trap. I mean, they sucker you in by doing that kind of shit. But you look at companies, like I said, like the ones, not that the ones I hold are great, but I'm up on all of them. Is, you know, like I said, Waste Management, American Water, Bank of America, AT&T, Pfizer. I mean, these are all companies that pay healthy dividends. The company's financials are in good health. Now, is that, you know, there are certain stocks you could probably buy and hold and pass them on to your kids, you know, but then there are some that you want to hold for like 20 years. And just because, you know, it's a long-term hold doesn't mean you don't still want to pay attention to what's
Yeah.
happening with them. You know, ExxonMobil, I'll use them as a great example. They might be safe now. They pay a healthy dividend now, but I sure as shit fire wouldn't buy a petroleum-based, you know, company, because in 15 to 20 years, do you think a petroleum based company, it all depends, but it's a finite resource. I don't think it's going away, but I think that there is going to be a global scale. And one thing that, you know, that a, you know, left leaning president will try to do is to push towards that. Biden's
Yeah.
not going to do anything against it in 4 years. shit, he wouldn't be able to do it in 20 years. And I'm not saying Biden, any fucking Biden.
Actually, I'd be willing to put money down that he could spend about 49 years or so in the White House and still not be able to accomplish what he wanted to.
But the point is, anybody could, and you're not going to phase out gasoline in the country that uses more of it than anybody. You know? But what I'm saying
it's
is
not right
that
now.
And but in 15, 20 years, where's it going to be at? Especially with, like you said, companies like Nikola, NIO, Tesla, all on the rise. Yeah,
and all those stocks he just named are more electric vehicle stocks, like NIO, Tesla. They're all electric vehicle stocks. So and they are going up. They're continuing to go up. I mean, see, the thing is, a president is not going to get us off fossil fuels. They're just not. You can implement all the policy you want.
It'd have to be a global event.
Yes, and so a president is not going to do that. They don't possess the power to do it, and nobody in their right mind would actually do it. What is going to get us off of fossil fuels and gasoline, oil, and stuff like that is the free market. Because I mentioned this in another podcast with my buddy Gavin. I said, before gasoline, what do we use? Fish oil was one of the biggest things that we used, and what got us off that? Gasoline. And what did that? The free market. The free market is what will get us off of fossil fuels and into green energy, if that's what you want to call it. Well, it's not going to be anything else other than that. It's going to be the people wanting to do it. Okay, it's going to be people, the customer base, and the people wanting to do it, and the companies figuring out ways to make it cost feasible.
That's exactly it. Making things cost effective and available to the general public. Because as of right now, I mean, your cheapest Tesla runs $30K, which, the average American isn't buying a $30K car,
No,
not that there aren't ones that can, and you see a lot more Teslas on the road than you do now, but even still, they have issues that they still need to iron out.
Yep.
And it's not Tesla is doing one hell of a job at making, electric cars a real thing. I mean, electric cars and hybrid cars have been around for a while, but Tesla is making them into the feasible, vehicle, no pun intended, for change in terms of fuel. Than any company before it. So I mean, I do applaud them for that. It comes down to the point where you can make it affordable for most common people to have one, and you make it plentiful enough. You make these charge stations or whatever it is. You make it practical and plentiful enough, and it doesn't even have to be electric. Whatever the hell it is.
Yeah, exactly.
Eventually place it.
As an example, because that seems to be
where
it's going right now is with these electric cars, but. What's going to get us there, as I think you were agreeing, is the free market is going to be people wanting to use it, and the technology being cheap enough for the consumers.
Good enough and cheap enough and reliable enough is really what
that reliability is certainly something big also. And even though Tesla is off the charts in terms of their stock price, I mean they're blowing Ford and GM out of the water in terms of their market share. But then again, they're not a car company. Tesla is not really a car company. I've been hearing this on CNBC, and I do kind of agree with them. Tesla, even though they do make electric vehicles and stuff, they're not just a car company. They're a technology company.
Yeah. Oh, yeah. I mean, and here's the thing, too. And Elon Musk is a man of many hats. When we were talking earlier about the SpaceX launch, a good point, one of my coworkers brought it up, too, is that, think about this. If you're invested in Tesla, which has no stake in SpaceX, which has no stake in the Boring Company, which has no stake in any of his other companies, they're completely independent of each other financially. Quick fact before I get into my point, Twitter and Square, which are two totally different companies, are both owned by Jack Dorsey, both owned and founded. He's the CEO of both companies. So to put it into perspective, just because Jack Dorsey might be a certain way, Square and Twitter are totally different companies. So they, exactly. So, but the thing is with Tesla and Elon Musk, I think it's different. He's the exception because this man put two people into space. If this man can have the technology to put people into space, he probably has the technology and the resources and the ability to make, like we said, the push for renewable energy and electric cars. Say what you will about it. I'm just saying he has now with their share price flying up, he has the money to do it too. Yeah. Like you could look at it two ways. It's a dangerous combination or it's a fantastic combination. It's an exciting combination to think of what anybody who's intelligent enough to do it, whether or not he uses his stuff for good, who knows? I don't know. I'm not speaking on his character. I'm just merely speaking to his
Yeah,
ability and now
based
his
off what you know.
financial backing to be able to make something happen. If this guy can put people, long story short, if he can put people in space, imagine what he can do with electric vehicles,
Yeah. Yeah, not only did
So,
it send people to space, but the space shuttle practically landed and flew itself. I mean, you saw them touching the touchpad a couple of times and stuff, but certainly much different than the way we used to get to space.
yeah, and it's amazing. I mean, it's amazing. If
Oh,
you
it
ever
was
been in
crazy
it,
to see that. It was
if you
crazy to
ever
see that.
If, yeah, and that's what I'm saying. And even and to go to what I was saying earlier, there's a Richard Branson, the CEO and founder of Virgin, has
Virgin,
his
yeah.
Virgin Galactic, which is of course SpaceX without as much to their name.
Yeah.
um, they flew up with the space shuttle launch,
Yeah, they did,
just
but
be a
they went
go.
back down. That wasn't as
Oh
much.
yeah,
That was as much of a stickler as Tesla was. But
yeah,
yes, it
but
did
they
go up
they
for a
went
little
up,
while.
but
Yeah,
they went up just on the hype. You don't
yeah,
ever buy on the hype. I mean, you don't, like I say, you don't buy and hold on the hype. You're not going to be like, oh,
yeah,
hype, I'm going to buy this because SpaceX, which is a totally different company,
yeah,
went up
yeah,
this
yeah,
stuff.
yeah,
But I was merely using that as a point to make, or as a point. Oh my God, as a reference point
yeah,
for what I was saying earlier, that totally unrelated events or things like Elon Musk smoking weed on these things can affect short-term price movement, but short-term price movements aren't important when you
when
invest
you're,
based on
yeah,
numbers. When
when
you
you're
invest,
investing.
period. When
Yeah,
you're buying for the long term, things like that don't matter.
yeah,
They never will matter. But um, yeah, what the whole reason I got into that, we were talking about ExxonMobil. Like, see, that's what I'm saying. I just get
yeah.
like if I have no um, I guess outline to follow or
We like to keep it casual. We like to keep the conversations. We
yeah,
like to keep the conversations just like organic. Let them flow
yeah.
naturally. I guide a little
I
bit.
ramble. That's my
When
problem.
someone's on a roll, and you certainly can get on a roll, I'll just let you. I'll just let you talk. I'm not. Let the people listen to it. Let them get some information.
But yeah, I mean, it's and there so those are the reason I brought up ExxonMobil is because, like I said, 15, 20 years from now, I don't know if I trust a company like that. So the whole point of me bringing that up was that eventually with investing, yeah, you do need to reevaluate your investments and you do need to see like, oh, after 5 years, after 10 years, should I be putting my money into something else? Should I be
Yeah,
investing in a growth stock?
or even
Now, the reason why they usually say when you're older, you should buy value stocks. When you're younger, you should buy growth stocks. Okay. And I'll explain why that is and what growth stocks are. Growth stocks, it's pretty self explanatory, but why that is because when you have value stocks, the ones that again don't really make too much price movements, but they pay healthy dividends. When you're older and you have more money to invest, obviously you're going to get larger dividends because you own more shares. Okay. So that, $78 payment that I said I got from Waste Management or whatever, that might wind up being a $780 payment to somebody who's nearing retirement age
yeah,
and, is trying to have some sort of passive income, or you are in retirement. That's the best thing you could do for yourself, in my personal opinion, is get yourself to the point where you do retire, you have the money to retire at age whatever it might be, and then take that money, your nest egg, so to speak, and put it in these value dividend stocks, and then just passive income. I mean,
yeah,
do nothing for it. You just get that, and then if you get enough of these value stocks to that, where one, like in quarter one, for example, one of your stocks will pay a dividend in January, one will pay a dividend in February, one will pay a dividend in March,
yep,
and then one pays, you know, again, and the cycle just kind of repeats itself.
yep.
So, you know,
I agree with you on that. The
that so
dividend
those so
stocks is
that's
good.
value stocks, and that's why they say when you're older, like I said, I have a large amount of value stocks right now just because, I don't have the time to trade like I was doing or buy or pay attention to the next growth stocks. I just have them in solid value, a lot of them in solid value stocks right now, some growth, but mostly value just because, like I said, I'm just going for the dividend right now. But growth stocks are stocks that usually don't pay dividends. Most of the time, they don't. There are some that are value and growth, like Microsoft, Apple. They both pay dividends, but they're small dividends, in comparison to some other companies.
Yeah,
But they're still growing, and their stock price is still flying up. But for the most part, it's value or growth. And then growth are those companies that, have the potential. Let's try to think of some. Square. Square is a perfect example of one. Um, I mean, honestly, I can go through the list right now. Go through my list. I'm trying to think of all this off the top of my head when it's like, I have the resources at my disposal.
Yeah.
I gotta love technology, right? That's why I
Yep.
invest in.
Yep. Exactly.
But growth stocks like Square, Snap, even. I mean, my God, Snap. I would have you would have told me with looking at Snap's financials and looking at how bad off they were at the end of like 2018. And then just with the advent of TikTok and the advent of these stories and everything like that, it just increased the popularity of Snap itself. I mean,
Yeah.
Snapchat's at $40 a share. It was as low as $5 at the end of 2018. I mean, that's insane.
That is absolutely insane.
You
I'm
think
not
about that.
invested
Four
in
dollars and
Snapchat.
82 cents. I mean, not to $4.82. Let's just say you didn't even buy in there. You bought in at $8. If I would have taken the 4,000 I initially invested and just bought it all into a growth stock like that, I looked at the financials and I looked at the changing sentiment of what these what was popular, because what's popular in popular culture sells. And if TikTok and related social media fads, like I don't even know how to describe what the TikTok shit is, because I'm not, like I said, I'm not on it. I know it. I know people that use it.
I
I
don't
know
need to.
what it
Yeah.
is,
Yeah.
but like I'm the fad of doing those kind of videos and things like that. Snapchat just kind of capitalized that on it as well. Like, so $4,000 would have gotten me 500 shares if it was at $8 a share. And then now, 500 times 40, that's 20,000 bucks.
Yeah.
So, I mean, turning, 5 times your profit, it's not,
No, that's good, and that's how people. That's what we're saying is that people should get into those companies who are going to grow and dividend stocks that will pay you to own the stocks. And
well,
I
and
think that's Go ahead.
and with growth stocks too, I mean, growth stocks, you take more of a risk because you don't know, like sometimes these companies aren't profitable, but Tesla wasn't. Tesla's a perfect example of a growth stock. Tesla wasn't profitable. Tesla still has only had a couple quarters of
Amazon,
profit. Amazon's been profitable for a hot minute.
but how long weren't they
Yeah, no,
profitable?
Amazon, but you're right. Amazon's a value stock now. It doesn't pay a dividend, but that's because its share price just keeps rocketing up. It'll
Yeah,
eventually, I think Amazon will eventually split.
but didn't they? Amazon was weren't they something up like 20 times earnings, like when they even went profitable, weren't they? I mean, they were just their stock, you know, just took off as
Yeah, I
more and
mean,
more people as Amazon became more popular.
most of the companies that are on that are big right now are trading at least 20 to 30 times their earnings. I mean, the market's been inflated. That's why when coronavirus hit, and we can discuss this in depth on another episode too, but
Yeah,
I mean, there have to be corrections to the market. It can't just keep going up. Eventually, it will go down. Sometimes it'll just go down naturally when enough companies report bad earnings, or sometimes it'll go down due to a black swan event like the coronavirus.
yeah.
That dip in the market needed to happen. A lot of those companies were artificially kind of inflated,
Oh yeah, big time.
and that
So,
correction needs to happen so they can get back down to their real value. And then from their real value, they begin to, like I said, either keep churning out a profit through adequate amounts of money being put into research. I mean, it all depends. Research and development is just one aspect of it.
yeah,
It's not
because there
all
are some
companies.
companies. Go ahead.
So I was just going to say some companies like, Waste Management, American Water, you just want to make sure that they're not overspending on their day-to-day stuff, that their operations are still remaining relatively low in terms of maintenance and how much money they're spending on that kind of stuff, and that they're not really running into too many losses, that they're doing enough to keep their business running and to keep it profitable. That's one thing you might be looking for. You're not necessarily looking for research and development in a company like Waste Management, but in a
Yeah.
company like Square, in a company like especially healthcare, companies like Amazon even have a lot. In Microsoft, these big tech companies, I should say, Facebook is one of the big ones. That's another company I haven't even talked about. Is Facebook? I mean, my God,
I
Facebook
figured the
is.
tech. I figured tech stocks is going to be its own episode.
Yeah, I mean, there's not. I mean, God, there's a
'Cause
lot
like
of tech is what's been dominating the market the past year or two, I'd say.
yeah,
Uh,
because I definitely and I look forward to doing the tech episode because I definitely got some things that I'd like to say about tech. So yeah, we'll definitely
and a
have
lot
to
of
have
it
a tech
too,
episode.
is, you know, they 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 generalize it sometimes. I don't want to say they. That's a general term in and of itself. But you read a lot of stuff online, or you hear a lot of pundits or YouTube personalities say that whatever everyone else is doing, don't do. Um, that can generally, that's not it's not as simple as that, but it's not necessarily untrue. Just because you know when you look at a stock and it's got a 98% buy rating and you're hearing your Jim Cramers and your
Yeah,
other personalities scream buy at this, and you're reading on these on stock twits and Twitter and all these other websites where you can interact with other people who invest and trade. um, you see everyone kind of flocking towards that stock. Hype is high,
yeah,
and euphoria is high. Euphoric buying is high. Well, it will always come down from there.
yeah,
You don't want to buy, like, there are chances, like, if you're holding a stock or if you're even swing trading something and you bought in before that and you see all the hype happen and you see it get to a mountain there, you might want to sell off because the next day,
make a
it's gonna
crater.
exactly, it's a pump and dump, and it's a
Yeah,
scheme, and in like boiler rooms and whatnot, where you just convince a lot. You buy a lot of a shit stock at a shit price, but then you use your resources to influence other people to also buy it and build hype and make it seem like you have insider information, or something big's coming and you made a big move, so people are like, oh shit. Because you can see when they're called market movers,
yeah,
when they buy a large chunk of something, it makes the stock price go up. If people have computer monitoring programs that when a stock, that's why you see the people with like the 1, 2, 3, 4, 5, 6 screen set up with the Bloomberg terminal in the middle and their laptop
yeah.
over here. You see all these people with these gigantic setups because they have these programs that monitor for spikes like that, and then they buy quick, and then they see the rest of the sentiment keep going, keep going. That's why you see your penny stocks just
Yeah,
that is exactly what they do. That's why the penny stocks, it's just dangerous unless you have like an expensive setup and like the software to run it. That's
yeah.
it's hard for just a regular person to
That's my
really
long-term
do that
goal.
kind of shit.
I want to be the guy with the 6 computers, looking all over the place and figuring out where the next move is. That's the long-term goal right there.
Yeah, well, I mean, hell, it's for some people. Me, man, I mean, I
No,
can.
I'm not doing that. I was just obviously being funny. I'm
Oh
not.
yeah, no, I hear you. Well, hey, dude, I could see it.
Yeah, I know. Yeah, I know. But
I
yeah,
really could.
absolutely. But no, I don't even want to. I don't want to do that. I'm happy to just invest and do some swing trading and stuff. I don't need to be sitting there with programs running and tracking all that. That's going to be a little much for me. We're
Well,
low tech around here.
you'll have your little beachfront commercial where you're like, "Hey guys,
Uh,
just made
if
10
I
G's."
let me tell you, if I got a beachfront property, I am not doing shit. Okay, I am not doing shit. Okay? The long term goal for me is not to help somebody else. Then once I made it, if I'm that rich and I got beachfront property, I'm going to
Dude,
beachfront
that's when you
property
do
and
those.
I'm disappearing.
That's when you become a media personality and you do your self-help seminars and you do your,
Yeah,
I can help you for a
or I'll
fee of
run,
$35 a month. Actually, $35 a month is cheap compared to what some of these guys do. I've seen
or
these
I'll.
discords and these trading groups I'm in. These guys will charge, like, it's like a lifetime fee to be in this thing. It's like $6,500.
That's crazy. See, I'm not doing any of
I
that.
bet they do
But
post.
maybe
They
I
do
will run
post,
for president.
and that's not. And hey, by the way, don't do that. Don't pay for programs. Don't buy for that kind of bullshit.
Yeah,
You don't
no.
need to do that. All the information is free. All it takes is just a little bit of
If you're
time, a little bit of patience.
if you're gonna
It
buy
just
anything, there's a couple of books out there that you maybe want to look into.
the
Copy
intelligent
suggested one.
investor. The ones I recommend to start are the Indomitable Investor. I think that's one of the best ones. The Intelligent Investor, which is also a good one. The Indomitable Investor. I don't remember who the author is. That's a great book though. like I said, I've got screenshots of that book just so I could always have some of the stuff handy. I mean, it's got a lot of good information, a lot of stuff that we didn't even cover.
Yeah. Well, like
Like
I
there's
said,
so,
we're
I
gonna.
mean, there's so much. We didn't even go over the sectors. We've been
No,
talking.
no, no, no. Yeah, that's gonna have to be for next time. Yeah,
Yeah.
there's so much that we're going to do, and this is obviously going to be an ongoing series here with Comets, being the chief financial correspondent
Yeah.
for the Boiling Point. So we're gonna have him on, hopefully more
Well, yeah, and if you
more
want
frequently.
to,
And now that he sees how easy it is to do this remote podcast, I'm sure that he's going to be a lot more willing to do it more frequently.
hopefully, man. Yeah, I
We
mean,
are.
it's honestly been I've been swamped at work, man. I
Oh
really
yeah,
have been. But
absolutely.
I'm glad I'm glad I'm finally able to make it on here. And I definitely think too, because this is, I mean, I ramble a lot and I go from subject to subject to subject. Um, in the future or for future episodes, I mean, I would love to, if especially if I knew what people really wanted to know. Not that I'm, some sort of guru. I just had a lot of success with it.
Yeah.
I've turned
No.
I've
Yeah.
turned, the 4,000 that I've had and saving up, and it's not just the stock market, but saving up and being smart with your money. But I've turned it into, over 50,000, and that's not me just being like, oh, I'm not bragging by any
Yeah.
means
No.
because it's not shit for money in the grand scheme of things. But
Yeah.
it's just been patience and being smart with my money, and obviously I've had,
Like I said, man, people have been wanting to hear the chief financial correspondent for the Boiling Point for 15 episodes now. This being the 16th. So, um, you know, like I do hold, stock in what you had to say about the market, and I'm sure that other people probably will take your advice also. And that's why I wanted to
well,
do the
yeah, and you've
first one for
seen.
first time investors so that they could get a little learn. And we're certainly going to do more here. Do you want to? We're about an hour and 45 minutes in. Do you want to
Wow.
get ready to end it, close it out here? You want to?
I
That
think, yeah,
good
I
enough for
think
you, or you
we
want to keep talking? We'll keep talking if you want to keep talking.
No, I mean, man, I honestly, I mean, it's just, like I said, I'm not an expert by any means. I mean, you've seen, like I said, I've sent you screenshots. You've seen the kind of stuff I've done. I've given you recommendations like Penn
Absolutely.
National. I made a lot on Penn. I've made. I don't know if I have all those texts saved, but there's been times where, just through my trading, I've offered you stuff. So I mean, that, I've had some good calls here, and
Yeah.
I definitely want to. The biggest thing is that I just want to help people make money. I want people to understand, like,
Yeah.
I don't have some sort of special training. I don't have any sort of thing that anyone else doesn't have access to. It's just kind of, I
Exactly.
don't think people realize how easy it is, and I don't think people realize how they could be in control, complete control of their finances without paying for these programs, without putting your money in 401ks. Not that I'm going to sit here and shit on 401ks, but I mean, I invest mine. I don't put mine in a 401k. I invest my money. Not that a
Yeah.
401k isn't a good idea, especially, because my company doesn't match until God knows how many. I think you have to be there at least 3 years. But I mean, if you have a good match and and it's vested, all your money's vested. I mean, I would recommend an IRA, a Roth IRA, if you're going to do something like that. But yeah, I just think being in control of your finances is a lot easier than people may realize. And
Yeah.
you hear
I,
so many different things in so many different ways. I just want to explain how I got to where I'm at. I'm not trying to say that, I'm more successful than Joe Schmo or this, that, and the
no,
third. It's just
you want to do it because, yeah, you want to
I
show
want
that
to help
anybody can do
people.
it.
Yeah, that it's easy to do and it's simple to do, and what I did to do it, and how
Yeah.
it helped me find success. So, that's really,
And we're
if I can do it, anyone can do it.
yeah.
That's where I'll put it at.
And we're certainly going to have you on again. We want you to be a regular around here. I know a lot of people are going to enjoy hearing your episodes as well. Whether they're interested in the market or not, people are interested to hear about the information about it. So
Yeah.
hopefully there are a couple people are going to listen and take our advice that are going to be new investors, and hopefully the people will listen so they can just understand more about the market or maybe even their own retirement plan.
Mhm.
So, well, thank you for joining us. I'm going to
Yeah,
do all
absolutely,
the,
man.
I'm going to pay the bills now before we part ways because I forgot to do it at the top of the episode. But make sure I'm wearing the JD Design shirt. Can I get up high enough there? Nope, not really. And I'm not going to keep the camera a minute down. So if you want to buy some t-shirts, go to bonfire.com/storefront/JDEDESIGNz. And then you can also go to bonfire.com/the Boiling Point Podcast to buy yourself some gear. We have shirts, there's sweatshirts, there's hoodies, there's coffee mugs, there's tank tops. So go check it out, buy something with the logo. You can also find us on facebook.com/JDEDesigns and facebook.com/the Boiling Point Podcast to stay up to date with all this. And also make sure you comment, leave your comments, leave your questions for John Comments for the next time he is on the show, and we can get you some of your questions answered, whatever they are. I'll make sure I stay on top of that. So please leave your questions if you have them. He's all about wanting to help people and get people the information that they need in order to become financially secure. That's why we're doing this. We want people to take control of their own financial futures and to be successful. So that's what we want. So please leave your questions so that we can answer those. Comments can answer those on the next time we have him on, which hopefully won't be more than 3 or 4 weeks. I think we'll try another one in 3 or 4 weeks, maybe less if I can get him to free up time.
Yeah, I mean, for sure. I definitely want to. And I'll try to next time. I'll try to think of like a theme and stick to it. That way we can get into depth on a topic, maybe a topic people want to hear, or a topic that we think is good for people to hear. So this is just a general intro. We'll like I said, we'll hone in and focus in on different things. That way, it's like I said, all we want to do and all I want to really do is just try to help people with their finances and with their financial education. Not that I'm some sort of doctorate in finances, but I definitely think from my personal experiences.
For people who are new investors who are coming in, and maybe even for someone who are some struggling investors who have started recently. So that's good. I'm glad, and we're going to keep doing these episodes. We're going to keep doing comments, having comments on, so that we can keep talking about the market, and we'll have many. We're going to have many on the market. That's just the way it is. From sectors to options to, I mean, a number of different things. We're going to have a number of different episodes regarding the stock market. This is just for the first timers who are thinking about it, who aren't actually doing it, which we encourage you to do so, as long as you're willing to do the homework and put in some of the work, so you know where to put your money, so it's safe and can make you money in the long run. Investing is good. Of course, you can trade. You can
start with anything.
We don't recommend trading for the first. If you're new to it, we recommend investing.
Yes, absolutely.
So, all right. Well, thanks for joining us for episode 16 of The Boiling Point, the stock market introduction. That is John Comets. I am JD, and that's the end.